Welcome to Trending Markets. What is a trend, why we trade with the trend, and how to trade with the trend is what we'll cover in this section. And getting straight to the point, an uptrend is where we have consecutive higher highs and higher lows. We have cyclicity making higher peaks and higher troughs. And this is what we call an upward trend, and we look to essentially buy after the retracement, buying the dips in advance of a higher high. We always want to trade long with an upward moving trend because the probabilities are a lot higher than if we're trying to pick a top and essentially go short. Not only do we have probability on our side here, we have momentum as well for a high probability, low reward outcome trade. Conversely, a downward trend has lower peaks and lower troughs over a prolonged period of time, said to have lower highs and lower lows. And with a downward trend, we only want to be trading short. We don't want to be trading against the trend at all, because if we're going short and the trend is going down, making these lower peaks and lower troughs, we've got probability on our side here for a continuation trade with high probability but lower reward. Suffice it to say, our trend is our friend until the end when it bends. Trading with the trend gives us not only the extra probability that the trade will go away, but also have a higher certainty that the trade will hit target as well, even though we accept a lower reward for this heightened probability. It is absolutely crucial that we don't try and short in an upward trend or go long in a downward trend. We want to work with probabilities here with traders, and we trade what we see, not what we think. So trends are separated out into phases, phase 1 and phase 2. Phase 1, whether we're in an upward trend or a downward trend, phase 1 is with the trend. So here in this upward trend, making higher highs and higher lows, like so, we've got phase 1 representing the higher low to the higher high. Then we have the retracement, which is where price action corrects, said to be phase 2. We don't want to trade phase 2, we just want to sit back and watch phase 2 manifest itself until we go into phase 1 again, i.e. with the trend again. That's where we have the probability and the opportunity to potentially buy the dip. Then we get the retracement after a higher high is made to a higher low, and we do not trade this until phase 2 is over and we can buy the dip again in advance of phase 1, where we're with the trend once again. Again, in a downward trend, we only want to trade with phase 1, which is essentially with the trend. From where we make a lower high to a lower low is phase 1. And phase 2 is when we have the rich pullback, as you might hear it referred to. After we have our pullback and the end of phase 2, in this instance here, we get the opportunity to sell the rally, sell the retracement. So when the retracement is over and price action has made a lower high, we can trade phase 1 in advance of it making a new lower low, and then get out when we enter phase 2 and the retracements again, and so forth. So you can see how straightforward it is to simply trade with the trend only. We do not want to be going in a downward trend long on phase 2. That's like trying to catch a falling knife. Of course, we've got probability as to how far, based on previous cyclicity, the move may be, but again, we haven't got the probabilities if we're going against the trend. And as traders, we trade our probabilities. That's what we want. We want to be certain that there's a high probability in our trade before taking the trade in any given direction. So how do we trade this? We could trade with the trend very easily. However, like with any trade, as you'll discover, we only really want to trade if we have our activated bar or reversal bar, which is a pin bar, otherwise known as a Hess bar, an inside bar, a double inside bar, or an engulfing bar, otherwise known as an outside bar. And, okay, we might be in an upward trend or a downward trend, but we want at least 2 technical reasons from our toolbox to justify the trade. This could be a moving average, could be the 20, 50, 200 or 100 with at least 1 previous touch. It could be a trendline bounce with at least 2 previous touches. In support of it, it might also have a reversal on the hourly time frame in favor of the trend. So if we're looking to go long in an upward trend, we'd look for a bullish reversal pattern on the hourly if we're trading off the daily. And if we're trading in the downward trend, we're looking for bearish reversal on the hourly time frame if we're trading the daily. If we have price action intersecting with a horizontal level, a Fibonacci number, weekly or monthly pivot, or a psychological number, then fantastic. But we don't just want to buy or sell willy-nilly. We want to build up the case. And we'll show you how we're doing this in the examples coming up. Here we go. We've got EURGBP. It's trickling down very nicely, making very steady lower highs and lower lows. We've got very good cyclicity here, and we've got a potential trade opportunity here. How do we get to this opportunity? Let me show you. You could certainly be forgiven for thinking, looking at the chart right now, it looks a little bit unaccounted for, our reasons to trade. But what we'll do is we'll use our skills and technical analysis to build up the case for the trade. So looking at the price action on its own, we understand that we've got cyclicity with lower highs and lower lows looking at the chart throughout the long term, like so. However, looking at the bar here, we can see that it's an inside bar and it's also a high test bar as well, which is bearish. But what's it bouncing off? Let's find out. We can see here that this previous swing low is acting as a level of resistance as this price action has retraced to intersect. We've got an inside bar which is reflective of the tides turning. The sellers are coming back into the market. We also have a trend line. We can draw this trend line, lining up as many points as possible. The problem with trend lines, of course, is that they're quite subjective, and people can draw different trend lines depending on what looks best to them. So the more obvious trends are undoubtedly the better ones, and here we've got a really nice obvious trend here. We've got 1, 2, 3, 4, 5 touches. This is the 5th touch. So we've got a trend line, an old support level now acting as resistance, which is synonymous with the characteristics in a downward trend. What else might we have here? Let's see what Fibonacci is saying to us. We take our Fibonacci retracement tool from the last swing high, from the edge of the cliff before price action fell, to the most recent swing low, all the way down here. And we can see that the price action, the level here, is intersecting with the 0.618 Fibonacci retracement level, which is a very good Fibonacci level to anticipate a continuation off the back of. We can also take our Fibonacci retracement from other swing highs to the most recent swing low to see if we've got a Fibonacci cluster, where we've got the overlapping of Fibonacci numbers on the level we're looking for this price action to turn around. So if we take it from this swing high before last and take it down to the most recent swing low, we can see that the level which price action is intersects with the 50% Fibonacci retracement level. And this is what amounts to a Fibonacci cluster. From this swing high to this swing low, price action has intersected with the 0.618, and from this swing high to the most recent swing low, price action has intersected with the 50% Fibonacci retracement level. So we've got an overlap here, a Fibonacci cluster. If we migrate to the hourly time frame now, which essentially equates to the inside bar and the previous engulfing bar, we can see that we've got a very significant price action pattern here. It's a head and shoulders formation on the hourly, which further supports our argument that this is going to go short. And our entry below the low of the inside bar, just here, will correlate with the break of the neckline of the head and shoulders pattern. So we've got all the stars in the universe lining up here for a short with this trend continuation trade. Based on price action alone, we have an inside high test bar, we have a head and shoulders on the hourly time frame, we have a Fibonacci cluster, the 0.618 as well as the 50 Fibonacci level. We also have the 5th test on the trend line. So we've got a lot going on here, in addition to old support becoming new resistance. This is looking like a very good trade short, based on our analysis, trading this trend continuation. So let's have a look at trading with an upward trend now. We've got Euro Aussie, and we can see here that we're making higher highs and higher lows. We've got cyclicity in our favour here, and we've got a respect for the 20 moving average once. So we've got a low test bar here. Let's build up the case for this on the chart. In addition to the second test on the 20 moving average, we've also got the third test on a trend line here. We've also got the low test bar or bullish pin bar reversal intersecting with this horizontal level here, which has spanned back for quite some time. It's a soft level which has been broken before but also respected before. Let's see if we've got a Fibonacci level as well. We'll take it from the most recent swing low to the most recent swing high. And we've got a 0.618 Fibonacci retracement, which is a decent Fibonacci number to retrace to. And let's see what the smaller time frames are saying as well. If we've got a bullish reversal, like a double bottom or an inverse head and shoulders, then this will look like a very solid trade. We've got 4 reasons to take this long, notwithstanding the fact that we've got a bullish pin bar reversal as well. So having migrated from the daily time frame to the hourly, we can see that the low test bar, or bullish pin bar reversal, is represented by the hourly as an inverse head and shoulders here, off the trend line, off the Fibonacci level, also off the horizontal level as well, in addition to the 20 moving average. So we've got, in addition to 4 reasons, we've got another reason to trade this long. So 5 reasons for a long is a very solid case for a trade. We've got it summarized here with a bullish pin bar reversal, rejecting a soft support level, the horizontal level right here. We've also got trend line, third rejection, 20 EMA. So as you can see here, we've actually got a total of 6 reasons to go long. Let's go to another example on a downward trending market on the daily. We've got pound Swiss making beautiful lower highs and lower lows. You can see the respect it has here for the 20 moving average here, as well as clear lower peaks and lower troughs. So we can see cyclicity in favour here. We've got our pin bar reversal here, bearish pin bar reversal, just intersecting with this horizontal level of support, now testing as resistance. See, we've got a trend line bounce as well. Try and line up as many swing highs as possible. You can see it's quite subjective. Sometimes lining it up can be a little bit problematic. That's why trading trend lines can be a little bit misleading, and that's why we always say don't just trade off the trend line by itself. Look for other factors to support the trade as well, because you've heightened your probability of the trade going in your direction then. So we've got the third rejection of the trend line, and let's see what else we can deduce from this. Let's have a look at our Fibonacci retracement. Take it from the most recent swing high, this one here. Even though it didn't quite intersect with the trend line, it doesn't matter. It's the most recent swing high. We can see that this bearish pin bar reversal also interacts with the 0.618 Fibonacci retracement. So we have 3 reasons to go short here, 4 if you include the fact that we've got our activated bar, which is bearish pin bar reversal. As you can see here, we've got it all written down. Bearish pin bar reversal, rejecting a support level as resistance, third rejection of a trend line, 0.618. So we've built up the case for a short here and targeting it to the previous swing low if you wanted a higher probability, lower reward trade, or if you wanted to accept a higher reward, but in exchange for a lower probability, you target a lower low somewhere down here. So let's talk about the FTSE in an upward trend here, making clear higher highs and higher lows, higher peaks and higher troughs. Yes, we can see we've got a bullish pin bar reversal here, or a low test bar, like so, which is a positive sign if we're looking at price action on the daily by itself. However, let's see what else we've got in favor of this trade. We can see that there's a potential trend line. Let's see if it fits. So go to drawing the trend line, see if we can get a good intersection with these 3 points, these key troughs here. Yes, we do. This is the third test. That's absolutely fine. Pin bar reversal. What else do we have? Let's have a look at our Fibonacci retracement. Take it from the most recent swing low to the most recent swing high. And we've got a 0.618 Fibonacci retracement to this Fibonacci level. That's great. Let's take it from this swing low as well, the very start of the move. Take it to the very top. And we've got a Fibonacci cluster, because not only has it intersected with the 0.618 Fibonacci level, it's also intersected with the 0.382 as well. So we've got an overlap here. So the great thing about this trade setup is we've got a trendline bounce, Fibonacci cluster already. What else do we have? Let's have a look at the shorter term time frames, like the hourly, and see if we've got a bullish reversal to see if it's constituted this bullish pin bar. And yes, we do. We've got the all-important higher low here, and we've got the neckline here, which has been broken and closed above. So this is a bullish reversal pattern, even though it might not be as obvious as some of the other bullish reversals we've seen or will be seeing, but it's still valid. So for the FTSE, we've got multiple reasons to go long. We've got bullish pin bar reversal, third test of a trend line, fib cluster, and a higher low on the hourly, building up our case for a long. And the key thing with trend lines is use them as a confirmation or a tick in the box when we're looking for trades. We don't want to rely on them exclusively for our trading. That's very important. But you can see with these examples how we can apply them to the mix and build up our case for a long or a short trade.